Welcome to TradeTheMBI.com. This is John. This report is for, the 22nd Friday going into the Christmas holiday. Market is stabilized at its peaks, even though we've ended up with a couple of signals of warning. The first one led to this little brief decay, then we ended up with this brief pop right here at the peak. Highs that suggested a little bit of return, but we had this nice reset of the short-term buyers, so every time they dip below the 13.5, they slightly come back, and that supports price. So that gives you your clue. Everyone always wonders, which signal for a short is going to produce the biggest returns. And when you get this kind of reset, it's an indication that you've got plenty of support buyers. The question then becomes, how fast does it rise? Will give you an indication of whether or not they've exhausted themselves. And then particularly, too, if you're getting a dramatic zone break of your red DOC where you go in between the lower zones. And you're not seeing that, which just tells you that the fluctuations right here are just about easing overbought. It hasn't really happened yet. I mean, that shakeout is still incredibly high, and we're still very elevated with the red line on the DOC, which is our long-term buyers. So, if it's enough to hold on to the beginning of the year where new inflows come in, then you'll break out. But it's pretty hard to justify much selling at this particular point. However, you do have year-end trade stuff coming in, and a lot of people are going to be rotating out of various sectors that have done well, booking their profits, that kind of thing, and there's still those trying to chase the gain because they thought that, the market was going to collapse, as they've been talking about, pretty much the entire year. Everything that we were having a recession on down, which we just called folly all year long, and who's been right? Yeah. And that's the beautiful thing is, eventually they'll be correct. Yes, they will eventually, but they've been wrong for so many years, and not understanding the transition between the stagnation, no growth policies that we had before, understanding what it would turn into with high growth, low regulation, and it was just an obvious signal. You can see here in the NASDAQ doing exactly the same thing. But when you don't understand those broader macro reasonings, not to mention the elevated euro here, certainly helps S&P earnings big time because of the number of corporations with overseas earnings. And then with the tax bill, you could see a dramatic capital flight from Europe, which is not priced in at this particular point. I think Germany has already expressed concern about it. They were already threatening the U.S. about tax reform because they recognize that a growing U.S. economy is a threat to the EU bloc in general. They have no way to compete. They're just not possible for them. And so you may see them want a lower euro. They're just sort of hamstrung because they can't do a whole lot as long as the U.S. Fed is supplying them the liquidity to keep their banks afloat, which is pretty much what they're doing. A little bit of a recovery in bonds is ridiculous. Don't know reason why other than it just reached an exhaustion point from the short signal that took place way up there. This should have a long way to go. However, as I pointed out, probably not going to be all that dramatic because there's still a question as to whether or not inflation is going to present itself in the near term. And we haven't seen evidence of that other than oil staying at this particular zone. If it starts to break out from here, then I would expect to see higher inflation pressure. You've got a complete reset here on the shakeout here while we've completely eased the overbought that existed before and have completely recycled, as well as DOC completely reset all the way down here and almost did an oversold. Didn't quite all the way. It's sort of in that no spark area that I call where it's like still a buy, but there's not a whole lot of oomph because it didn't reset with the steel and it didn't dip below the 13.5. Because that's usually when you get your stronger, like back over here where you have at least the midterm buyers dipped and then you get the nice run up. So, it's all right. You get these variations. Gold's still continuing from the buy. Now, we do expect that as you approach that 0 point, might see a fade off. We've seen short-term buyers easing a little bit. It's been just enough to get long-term buyers to cross the line, but this is not a huge amount of enthusiasm. What you don't have is any shorts into this gold setup at this particular point. And that's probably because they're all playing with the short over here, which is the Bitcoin. So reached the peak right there. That gave us the sell signals. We got a secondary one at the 50% mark. And once that one happened here, we've just been cascading lower and lower, making new lows. As you're making new lows, even though you're getting the buy setups, you're not even expecting those to make it to the 50% when that happened. And then we got to positive shakeout, and you couldn't even break the 38% at that particular point, and that started another fade. And so you can see that we've had no short-term buyer reset. They've all been at peak levels, even though you've had some dips of the orange. The reality is, as long as that new lows were being made, you had no buy signals within there until we got all the way down to the peak right here, and you ended up with one right at this point. Made it to the 50%, got above it all the way up to the 61, but declining highs. Should have had a little bit more oomph to it if that was the case, but couldn't get a positive shakeout out of it. And it started to roll over, and once it broke the 50% line, cascading lower all the way down again. It's going to break new lows. We'd expect that to continue. Still, no short-term buyer reset. So even in this oversold, you have no short-term buyer reset, which means they're still holding it up at this particular level. And that's dropping. So you just made a new low right now, live action. So significant impact. A lot of the arbitrage spread is narrowed on them, and so futures certainly are causing major disruption for them. Not to mention the fact that it was a crazy run from, well, geez, if we shrink this, was from 20,000 and went down to 13. So that's like nearly a 50% retrace from this broad short signal that I gave you back here. Where was that, all the way up to 19,430 was the secondary short signal, and it's just been a straight downhill climb from there. You've had a couple of decent buy setups within those. Definitely worth playing those, but the broader short coming in when we ended up right up here at the peak for the secondary run around 17,000, and then a little bit lower here at the 16.8, and it's just cascaded lower from there. It was pretty clean from that standpoint, and so not a shock. Turning to our 5K, well, kind of erratic. All we're doing is just going sideways. You can see we really haven't changed our peaks any. All we're doing is making double bottoms. We talked about this as we were coming in, proof shakeout, and sure enough, that gave us the run to the bottom. And then once we started to see a little bit of a low hike right there, that's when we start to look for any DOC spreads, but we didn't get it until all the way over here. And that took place right over there. So that was a significant, and that just was an expectation to the 50% because you didn't have rising low at that particular point. So really clean action. Like it when it's like this because it just lets you know this is all big players, institutional. There's no goofing around. They've got the rate straight off programs running, and we're not seeing a whole lot of individual player action because if we were, then we would have a little bit of a discrepancy because they don't behave the same way as the algorithms do. So super clean, makes it easy for us. Hopefully it'll be a little easier for me with all the running around, with all the end holiday stuff. Everyone, I hope, has a happy Christmas, Hanukkah, whichever you're celebrating. You got Bafana coming up, Kwanzaa, all of it. Enjoy. As always, though, trade well. I will post any relevant charts as they come available. We'll talk again later.